Welcome to The Explainer. Today, we're going to pull back the curtain on a market secret that could, well, fundamentally shift your entire trading strategy. It's all about learning how to follow the smart money. So let's just start with one single, kind of staggering number, 90%. That's the estimated slice of daily trading volume that's controlled by institutional giants. Hedge funds, banks, the big players. Just let that sink in for a second. 90%. So, what if 90% of the market is playing a completely different game than you are? What does that actually mean for the rest of us? You see, this isn't just some random statistic. It's the central puzzle that every single retail trader out there needs to solve. This massive influence means that pretty much every significant price swing you see is driven by the flow of this big money. Now, if your strategy ignores that reality, you're essentially trying to swim against a tidal wave. And that is a really tough way to trade.
But here's the twist. What if this overwhelming force wasn't an obstacle at all, but more like a roadmap? The real game changer is realizing that these institutions, for all their size, can't completely hide their moves.
They leave behind what we call footprints. And that, right there, is our key. Instead of trying to fight these market giants, we can learn to read their tracks and basically follow their lead. And that's the core shift in perspective we're talking about. It's not about fighting the flow. It's about learning to ride the wave with the giants. And to do that, well, we need to learn how to read their playbook. And, like any playbook, it's got its own language. So we're going to decode 3 key terms from a framework that's actually designed to do just that. It's called Smart Money Concepts, or SMC for short. Okay, first up, we have something called order blocks. I want you to imagine these as invisible ledges on the chart where institutions have stacked just huge orders. These are zones where price is highly likely to react, creating these powerful levels of support or resistance. Here's a quick tip. Look for a big candle that moves against the trend right before a massive push in the other direction. That candle, that's often your zone. Next up is liquidity. Now this is fascinating. Think of it like a magnet for big money. Think about all the obvious places that we as retail traders put our stop-loss orders, right? Just above a clear peak or just below a clear valley. Well, SMC theory suggests that institutions sometimes intentionally push the price to these exact levels just to trigger all those stops. It's something called a liquidity sweep. And finally, there's the break of structure, or just BOS. This is a huge telltale sign that the tide is turning. When the price decisively breaks past a significant high or low, it's a really powerful signal that institutional momentum is shifting the entire trend. Okay, so smart money concepts. That gives us the why behind the market's moves. But to understand the what, what's happening right this second on the chart, we can turn to another really powerful approach, price action. And this table here, it just lays out the difference beautifully. Think of them as 2 sides of the same coin. While SMC is all about decoding that institutional intent, the why, price action is focused purely on reading the story the chart is telling us. Candlestick by candlestick, without really needing to know why it's happening. The truth is, they work best when you use them together.
A huge principle of price action is context. You can't just look at one single candle and know what's going on. As one veteran trader on Reddit put it, you have to zoom out to see the bigger picture and then drill down into the details. This kind of multi-time frame view is absolutely crucial for understanding the full story.
Now, let's be real, trying to track all of this stuff manually would be more than a full-time job. It'd be impossible. So the big question is, how can we possibly spot these institutional footprints in real time without being glued to our screens 24/7? Well, this is where technology really gives us an edge. There are now some seriously sophisticated tools out there designed to do all the heavy lifting for us, automating the hunt for these footprints and turning a sea of market noise into actionable signals. Take a tool like Big Money Tell, for example. It's literally engineered to sift through mountains of market data, and we're talking over 1 million data points every single day, just to spot those subtle patterns of accumulation and distribution that signal what institutions are up to. It's kind of like having a whole team of analysts working for you, pointing out exactly where the smart money is moving. But here's the most important part of this whole thing. Understanding these concepts and using these tools, it's not about finding some magic bullet or a holy grail. It's about a fundamental shift in how you view the entire market. This 3-step process right here is the core of this new mindset.
It's all about graduating from being a reactive trader, always one step behind, to becoming a proactive one, someone who can anticipate the market's next move because you're following the smart money. So the final question you should ask yourself is simple. Are you trading with the current, or are you still trying to fight against it? Because once you start seeing the footprints of the giants, you'll find it's a much more interesting and potentially a much more profitable path to follow.